The recovery has not taken place, but the housing recession is over. Yeah, I didn't say that. That was Larry Yoon, who's the chief economist for the National Association of Realtors. He was just quoted saying that recently. So, okay, Larry, when will homes be affordable again? Look, I'm sure when you clicked on this title, you saw this title and you're like, oh my God, do I really want to know? Do I want to know the answer to this one? Like, is it really going to be that bad? Homes aren't going to be affordable for a long time. Yet here you are. It's almost like watching a train wreck, and you don't want to watch it, but yet you kind of want to watch it to see what's going to happen. Yeah, I get that. And I'm here to give you that information. So now it is August. This housing market this year has not turned out what the experts had predicted or what we had hoped for. We thought we'd get a little bit of a reprieve this year, but no, it has not happened. Look, I'm tired of talking about this. I'm not going to lie. Like, I feel like I'm a broken record coming on here every month, whether it be here in my weekly videos or during my live streams. And it's frustrating for me, but I do it. I put this information out there because I feel that it's my duty as a creator and also as a real estate professional to give you this information, to talk about this stuff, to help you make the best decision for your real estate needs, whether you're buying or selling, renting, what have you. Don't kill the messenger. Don't get mad at me. Look, I'm just trying to give you the facts. I'm going to give you the information, and then you just take that, do with it what you will, and make your decision based on that. Forbes Advisor just came out with another article talking about this very thing, talking about the predictions for the rest of 2023 and also for the rest of this month, the month of August. And yeah, so when will homes be affordable again? I think we already know the answer to that one, right? Let's get started. So the article begins to say, though summer temperatures have been scorching hot across many parts of the country, housing market activity remains tepid. The national average 30-year fixed mortgage rate ended in July, where it started, before edging near 7% the first week of August. A basis point is 1/100th of a percentage point. Meanwhile, existing monthly home sales dropped 3.3%, with all four major U.S. regions posting year-over-year sales declines. This is according to the National Association of Realtors. Meanwhile, the median existing home sales broke through 400,000 for the first time in 2023, hitting $410,200, the second highest price ever recorded, and is now poised to surpass the June 2022 all-time high of $413,800. Yikes. Despite high mortgage rates, the market remains as competitive as ever thanks to strong demand coupled with tight inventory supply, due in part to those who purchased homes in recent years at record low interest rates staying put. These and other factors form a perfect affordability crisis storm that continues to sideline many aspiring homeowners. So yes, my friends, this is still going on. The inventory is a big problem, as it has been really since 2008. And I'll get into that a little bit more later. So it goes on here to talk about the housing market forecast for August of 2023. Housing market activity remains weak overall thanks to high mortgage rates, elevated home prices, and constrained inventory, a trifecta of headwinds perpetuating the housing affordability crisis. At the same time, high inflation and more interest rate hikes still hang in the air. Thank you, J-Pal. Appreciate it. Mortgage rates rose for the first week of July, jumping to 6.96% by mid-month as Federal Reserve policymakers voted to raise federal funds rates by a widely anticipated 25 basis points at the July meeting. A Fed rate hike indirectly impacts long-term home loans, such as 30-year fixed-rate mortgages. The federal funds rate hovered near zero in March of 2022 when the Fed began raising rates. The rate range is now between 5.25% to 5.5%. The Fed will likely not stop there. In response to reporters at the post-meeting press conference, Federal Reserve Chair Jerome Powell stated the economy has yet to feel the full impact of the Fed's actions and that the committee's efforts to tame inflation to 2% target still had a long way to go. We've had a long way to go since last year. I mean, are you kidding me? This is ridiculous. Sorry, I digress. This guy's getting on my nerves. The Fed revealed new terminal rate projections in June that suggest the rate will reach 5.6% by the end of 2023, implying at least one more rate increase in 2023. Consequently, many experts believe mortgage rates will remain above 6% for the remainder of the year. Now, what about this housing market recovery? Well, it goes on here to say, although weekly averages for 30-year mortgage rates are down from their fall 2022 peak, if the ongoing oscillation between 6.5% and 7% continues, or rates break through 7% again, it's hard to imagine housing market conditions significantly improving anytime soon, especially if the Fed continues with rate hikes. Now, I've said this before. What Jerome Powell and the committee is doing, I understand what they were trying to slow down the whole housing boom. As I said this before, this is an effect of what they did has caused unintended consequences, right? It backfired on them. It's now made this housing market like it just completely unaffordable right now. So here they were trying to slow down the price growth and all of that. High interest rates have now killed the inventory. Nobody wants to sell. There's no inventory. There's no competition. This is why the prices keep going up. I could go on for days about this one, but I'll stop right there. Now, Danielle Hale, who's the chief economist of Realtor.com, she says, I expect the number of homes for sale to decline this year and continue to be a damper on home sales. Limited inventory is also keeping prices high, even though housing affordability has deteriorated significantly in the past 3 years. On the other hand, some experts are choosing to flip this script and focus on the signs indicating that the market is entering a new phase, such as our friend Larry Yoon. The recovery has not taken place, but the housing recession is over. I love that Larry's optimistic. I think this is why I've always liked Larry Yoon. I love that he tries to put a spin and make it more optimistic. But listen, Larry, I get it. You want to put a positive spin. You want to give people hope. I get that. But I'm a realist, and so is a lot of people. And I know we can't predict the market, but I appreciate it, Larry. I really do. We got to do better than that. He says here, despite this optimistic take, he acknowledges that home prices will remain high due to demand outpacing housing supply, and that more inventory will prove critical to providing greater access and affordability for aspiring home buyers. Larry, we won't get more inventory until the interest rates come back down. That's it. That's it. Builders can build new homes, but even that's not enough. It's not going to get better until the rates come back down. There, I said it. Now, let's see what Forbes has to say about the housing inventory for the rest of 2023. Low housing inventory has been a challenge since the 2008 housing crash, when the construction of new homes plummeted, but it still hasn't fully recovered. And it won't in 2023. No kidding. Housing supply remains at near historic lows, especially entry-level supply, consequently propping up demand and sustaining higher home prices. Nonetheless, new home sales took a small hit between May and June as mortgage rates sailed past the 6.5% mark. Sales dipped 2.5% to 697,000 new single-family homes selling in June compared to 715,000 in May. The median sales price for a new home was $415,400, according to the U.S. Census Bureau. With low existing home inventory, new home inventory is becoming competitive, and new homes are now competitive on price. This is from Robert Frick, who's a corporate economist with the Navy Federal Credit Union. The premium for a medium price new house versus an existing house is only $5,000. Now, it also goes on to say here, inventory is approximately 46% below the historical average dating back to 1999. This is from Jack McDowell, who's the chief investment officer and co-founder of the Palisades Group. We think that it is highly unlikely that the inventory problem will be resolved in 2023. No, it will not be resolved this year. The country ultimately needs 4.3 million more homes, according to Zillow analysis. There are simply not enough homes for millions of people. Unless we address the shortage of smaller, more affordable starter type homes, we risk leaving families without a seat, and it will only get worse over time. Now let's talk about the affordability issues. Despite signs that home prices are beginning to weaken in some regions, the country is contending with the housing affordability crisis thanks to a meager housing supply, persistently high mortgage rates, and sale prices that have steadily resumed their climb since February. Even as inflation cools, those hoping to buy a home continue to feel the effects of pandemic-fueled home price appreciation coupled with elevated interest rates. First-time home buyers hoping to buy a starter home will need to earn about $64,500 a year. That's 13% more than a year ago. This is according to a Redfin report. A typical starter home hit an all-time high of $243,000 in June. Yet, if you make $75,000 or less, chances are you won't be able to purchase a home in today's market. Those earning $75,000 a year can afford a $256,000 home. Yet, homes at this price or less accounted for only 23% of the existing home listings in April of 2023. Given the rebound in home prices, with the average 30-year fixed interest rate hovering well above 6%, it's no surprise that housing affordability is showing signs of further deterioration. 76% of aspiring homeowners were unable to afford listed homes in their market in the second quarter of 2023, up from 73% in the first quarter. And this is according to the latest Housing Trends report. Unless we address the shortage of smaller, more affordable starter type homes, we risk leaving families without a seat, and it's only going to get worse over time. Now, another thing I wanted to mention in this article, they talk about foreclosures. So it's asking, will there be a lot of foreclosures in 2023? It says here, foreclosures tend to trend up, potentially hitting pre-pandemic levels soon, according to a recent report from Adam, a property data provider. Foreclosure activity was up in the first half of the year by 13% compared to the same period last year, and experts say increased activity may be the norm for the foreseeable future. Although overall foreclosure activity remains below historical norms, the notable surge in foreclosure starts indicates that we may continue to see a rise in foreclosure activity in the coming years. In June, foreclosure filings were up 3% from May and 8% from last year, according to Adam. Foreclosure completions were down 20% from the previous month, but up 1% from a year ago. The top 5 states with the highest foreclosure rates in June were from highest to lowest: Maryland, Delaware, New Jersey, Connecticut, and Illinois. While foreclosure rates are up year over year, experts do not expect to see a wave of foreclosures in 2023. Even in areas with depreciating home values, many homeowners have substantial equity due to progressive home price appreciation in recent years. So yeah, this is a big thing too. People are banking on foreclosures. Not going to happen, guys. You're not going to see a huge wave of foreclosures because of this reason that they state in the article. People have so much equity in their house. If they were to sell their house now, they're going to make a lot of money on it. So don't bank on that. Yeah, there are foreclosures out there. They are happening, but don't expect that this is going to be 2008. We're just going to have a flood of them. That's not happening. So I always go into what is it going to take to buy a home in this market, or should I buy a home in this market? Well, you only buy a home if it meets your needs, if it meets your personal financial situation. If you are financially ready, you have all your ducks in a row, absolutely, I highly recommend you do it. It is challenging. Now, I just had a client, they wanted to sell their current home and buy another one. The problem is that they needed the proceeds from the sale of their house to buy the next house. And the problem is the inventory in this area was so limited, it's nearly impossible for them to make that transition without having to buy the next house first. So this is what I'm seeing a lot now. If you're going to be moving, you should be planning on purchasing the next home. If you can, buy that first and then sell your current home. Believe me, your home, if you're depending on your market, but if you price the house well, the home's going to sell really fast. If you have the financial means to do it and you can buy the next home first, I hate to say it, I think that's the best way to go about that right now. If you're currently renting and you're dying to buy a house and this whole affordability thing is getting to you, I totally understand that. And like I say every month, and you're probably sick of me saying this, you got to keep saving your money. And just, if you have money, regular savings account, put it into a CD right now. The interest rates are ridiculous. They're really good. So you can be earning a lot of money on your savings right now in interest. So really consider doing that if you're still going to be waiting for things to start to pick back up again and we get more inventory. So yes, folks, homes are not going to be affordable for a while. Unfortunately, it is what it is. So you're just going to have to either hunker down, wait it out, or come up with a plan to find a way to be able to get into a home if you really need to be in one. If you liked what you saw today on this video, I highly recommend you check out this one over here. It's got really good information in it. Thank you so much for watching me today. My name is Jackie Baker, and I will see you next time.